Hello traders, Gary Wagner with the Gold Forecast. It is Wednesday, the very first day of December, last month of 2010, and this is the Daily Report. Gold currently trading up about $2.50, currently trading at 1390, 1391. We have predominant weakening today of the U.S. dollar. There is a little bit of profit taking there, and that is causing a rise in gold of about $10, but there's also some profit taking in gold this morning. That's getting it down about $8 there, the net change being about $2.50. Of course, right now we are seeing gold back off some of the previous highs. It has had a high today of $13.94 in today's report. I'm going to be talking about a couple of different resistance levels, and we are going to be adjusting our stop all here on today's daily report. We are looking at a 240-minute chart. Each candle represents 4 hours of trading activity. The first thing that I do want to discuss is stop placement. We've currently got our stop very, very loose right in here at 1320. It's really been a doomsday stop, so to speak. At this point, though, we have had a pretty strategic and nice move up, and it also appears, at least tentatively, that we have really good support right in here. This is that 76% retracement level, 1351. My recommendation, therefore, is to move our stop to 1348. That's 1348 on a protective stop and maintain our long position. The other thing that I really want to talk about today is some of the upside resistance points that we might hit. As you can see, I have created a Andrews pitchfork. It's been pretty effective for us before. Simply put, it's drawn from this low right in here. We then need 3 data points, so we're using this low and this high, and really what I'm looking for is that extension of this upper arm, and as you can see, that seems to be where we are running into some resistance. Now, I did draw in a resistance line yesterday, and that was based upon these tops right in here, and that was right at around 1380, 1388. And to me, that was absolutely a critical factor that we needed to overcome. I believe at this point we can safely say that we have traded over that point, and also we have closed over that point, so that I feel fairly secure right now in the fact that we're going to attempt to, at least tentatively, form a base in this area right in here. That's what's really important at this point. The other thing, I don't think we're going to see too much resistance on this upper line. I think it's going to be able to pretty much track through there. I think the next point we're really going to find some resistance is going to be a Fibonacci-based number, and that's this 50% retracement right in here at 1400, 1401. 1400, of course, is a huge psychological number. Traders, of course, this is our daily chart of Forex gold, spot gold, and as you can see, the candlestick that we are forming today, it is an up day. It is a continuation, really. So we've had 3 solid up days in a row. As I say, it's trading nominally higher, but it is trading higher. It's another way for us to look at some resistance points, and of course this top right in here, if we extend that as a straight line, you'll notice that that might be where we're seeing some resistance from, that 1390, 1391 area. As I said, I really believe that once we are able to, I should say if and when we are able to, breach this $1,400 ceiling right in here, my personal feeling right now is we will make an attempt and a stab to take out these highs here. In terms of Elliott wave, I do believe that we're probably on our last impulse wave in this impulse phase, and thereby I think we've got one more solid push before we go into what we call a corrective phase. Lastly, what I wanted to do this morning is take a look really at our Elliott wave count as I look at it now, and my belief is that Once we hit our correction, this is our A, B, and C, and we actually went into our impulse phase right in here, waves 1, 2, and 3. This 3 really was a extended wave with what we call a minor wave count within it. In terms of this wave, our current wave right in here, I do believe, at least tentatively speaking, and we'll know as we get more data in, that we're moving into our fifth wave right now. And as I say, if this is truly a fifth wave, in other words, the only other option would be that this wave 4 is going to be a complex wave, something like this, and then we go into our final wave. The only way we're going to know is if we get higher highs or lower lows. In other words, if we break this particular barrier here or this particular barrier here will give us confirmation. But if this market continues to take off and absolutely goes and makes new highs, then that will tell me with some absolute certainty that there's an extremely high probability that we are in fact in our fifth and final push, that wave 5. We'll take a look at that later. But right now, as I said, my recommendation, maintain our long position. We're in at 1354. It's a good position right now. Secondly, let's see where this market takes us. And then lastly, my recommendation is to move our stop. And that stop is going to be at 1348 on a protective stop. So it's right in this area. And what I'm trying to do is place it below the bodies right in here, believing that that should provide us with some support. This has been Gary Wagner wishing you, as always, good trading. And we'll talk to you tomorrow for another report. Bye-bye.